simple words, what they have found is in accounting for their derivative trades, they have not accounted for it properly. And during an RBI inspection, they have found that their exposure was higher by 2,000 crores. And that is going to be the maximum loss that the bank is going to really take. So this has been identified during an inspection with the by the regulator, that is the Reserve Bank of India, where for the past 4 5 years the accounting was not correct, and during one of the inspections the regulator has found this out and told IndusInd Bank that they need to correctly account for this, which will mean that 2,000 crore of loss. So the regulator does a good job in periodically assessing the books of all of these banks, and during that inspection the bank has found out RBI has found out and told the bank to recognize this in the P&L. So net, in simple words, 2,000 crores loss will be taken by IndusInd Bank during Q4 for the unaccounted hedged derivative transactions that they had taken. So of the net worth of IndusInd Bank, this is about 2.35%, and for the profitability of FY24, this is about 25% profitability of IndusInd Bank that is going to get hit. Yeah, so IndusInd Bank CEO had sought an extension for 3 years, but the RBI shut down that extension, and that extension is now only for 1 year. This has contributed extensively to RBI not agreeing to renewing the term of the existing CEO. RBI found major glitches since 2021, where it was not satisfied with the functioning of the current CEO, and that's why they have just given a 1 year extension. So effectively now IndusInd Bank is looking out for a new management per se who will take over from Mr. Sumant Karpalia, who is the CEO of IndusInd. So micro lenders are undergoing a massive rise in NPA. Not only IndusInd Bank, all banks across the sector and all NBFCs as well are seeing a spike in NPAs. So from that perspective, this problem is not only centered towards IndusInd Bank. The first point. Second point is on the IndusInd Bank microfinance portfolio. That portfolio is seeing a slippage. That portfolio has seen a slippage of 2,000 crores last quarter, and the NPAs are at about 8%. And Q4 also doesn't look really good. So this could not have come at a worse time when the microfinance NPAs are rising together with the fact this 2,000 crore hit is going to come in, and on top of it, the management transition is also going to happen. So really very difficult time for IndusInd Bank. It will take about 6 to 12 months for the bank to really come back, but I don't think they will have a problem either on the loan growth side of it or on the deposit side of it. Mind you, IndusInd is a great franchise, and IndusInd does have a great loan book on the vehicle loan side of it. The bank has a solid franchise within the vehicle finance space, as well as the microfinance space with the Bharat Financial acquisition that they had really done. So from my perspective, of course, this is a short-term problem. However, the franchise of the bank is really very strong that the bank will slowly and steadily come back. So the capital adequacy ratio of IndusInd Bank is at about 16%. With this 2,000 crore rupee loss that they are going to take, the capital adequacy will seriously come down, and I estimate that the bank will need fresh equity infusion. That may be from the promoter or that may be through a QIP, but the bank will require capital if this entire drawdown is taken at once. From an equity shareholder point of view, of course, there is a concern that if the bank is reporting a loss, there will be an erosion in the stock price per se. So deposit holders must not worry. Equity holders must be very careful. So this is not the first time that there have been these technical glitches at IndusInd Bank, and that's exactly why the reason why RBI is taking a view that the management needs to change. In 2021, on the micro lending side of it, 84,000 loans were given to customers without their customer consent, and they named it as technical glitch. So there is an issue of corporate governance on IndusInd. This episode takes a massive hit on IndusInd. Now the entire management has to go, and a new management has to come in to instill confidence among shareholders. No, so the now the valuation has come down to about 0.8 times price to book. In my opinion, the valuation is fair, but the challenges are too many, too big for IndusInd Bank in the shorter term. So at least for the next 6 to 12 months, the stock price will not do anything. The market will wait for the new management to come in. Once the new management really comes in, then the market will tend to move on the stock. But right now, in the shorter term, things look really very difficult, even though the valuations are cheap for the company.